Welcome back to Investing Talk podcast. Today, we're taking a close look at freight technologies. You sent us information outlining the recent activities, and our mission is to unpack what's most important for you to understand. We have articles covering their business, recent performance, even some detailed due diligence. It seems like there's quite a bit happening with this company, from AI in logistics to a rather unique crypto venture. Let's get into this and see what stands out.
It certainly seems like an eventful period for freight technologies. Looking at the information, we can see they're operating in the logistics technology sector with a specific focus on AI-driven solutions, primarily for cross-border shipping within the USMCA region. Their core business model, it sort of revolves around several proprietary platforms designed to streamline various bits of freight management.
Okay, let's unpack this a bit then. We're talking about Freight app. That's a B2B marketplace, right? For cross-border freight.
Offering real-time pricing and tracking.
Then there's a Freight Fleet. That focuses on dedicated fleet management, but for enterprise clients, specifically in Mexico. That's right.
They also have Wavely. That's their platform for booking ocean freight globally. And Fleet Rocket, which they describe as an AI-powered transportation management system, a TMS, for brokers and shippers. It sounds like they've got a pretty diverse suite of tools.
That's correct. Their strategy appears to be building this comprehensive ecosystem of tech solutions aimed at different segments of the logistics industry, with the strong emphasis on leveraging AI to improve efficiency and, transparency.
Okay, now this is where it gets really interesting, I think. The stock price for FRGT, it's seen some wild swings recently. Just wild. We're seeing reports of intraday surges, between 11% and 38% on April 30th? Then a massive 181.28% jump on May 2nd. What is fueling this kind of volatility?
Well, a significant factor appears to be their recent announcement, a $20 million funding initiative. But here's the thing. It isn't really for expanding their core logistics business in the, let's say, traditional sense. It's apparently to develop a Trump-themed token called Trump Treasury.
A Trump-themed token? Yeah. They've even gone as far as acquiring around $8 million in FET tokens as of late April. This pivot, while it's generating short-term excitement, it fundamentally shifts the narrative around freight technologies, doesn't it?
It certainly does.
It moves them away from being, a pure-play AI logistics company and introduces this significant element of political and cryptocurrency speculation, which, investors really need to carefully consider for long-term valuation.
So a Trump-themed crypto token is a major driver here. That's,
Sure.
Unexpected for a logistics tech company. We also saw a report, didn't we, of a 38.05% increase on April 30th, tied to transportation contract wins.
Correct.
And another mention of a potentially even larger intraday spike on May 2nd. It sounds like there are a few different things going on.
Precisely. It seems there's a combination of news hitting the stock. The reported contract wins, they'd naturally be seen as positive for their core business. It makes sense. However, the sheer magnitude of the later surges, particularly that one on May 2nd that coincided with the Trump token news and the launch of their AI lab, it suggests that these non-core initiatives are having a significant and perhaps, outsized influence on market sentiment. The spike in trading volume also supports this idea. Increased investor interest, possibly driven by more speculative trading.
Okay, let's shift gears slightly. Talk about their financial health and what we can glean about their future outlook. They're projecting revenue between $20 and $25 million for 2025, with a gross profit of $2 million to $3 million. However, they're also anticipating an operating loss in the range of $4 million to $5.5 million. What does this tell us?
Well, it paints a picture of a company that is, yes, experiencing revenue growth, but hasn't yet achieved profitability at the operating level. Not yet. The projected gross profit, it indicates their core services are generating income above the direct costs. That's good.
Okay.
But their operating expenses, things like R&D, sales, admin costs, are still outweighing this profit. The absence of specific net income, or EPS figures, further suggests that overall profitability, it remains a challenge for the near term. This also raises the question, doesn't it, of their burn rate and the time frame within which profitability needs to be achieved to avoid further reliance on potentially dilutive funding.
And we don't have specifics on their debt levels from these sources, but The fact that they've recently secured $20 million in funding suggests they might be relying on external capital to fuel growth and maybe cover these operating losses.
That's a reasonable inference, I think. Companies that aren't yet consistently profitable often do rely on funding rounds to support operations and strategic moves. The form of this funding, convertible notes, as mentioned in some sources, that's also something investors typically scrutinize quite closely.
Okay. Looking at their strengths, we see a diversified suite of AI-driven products and a strategic focus on the USMCA cross-border logistics market, which is noted as a high-growth area. That seems positive. Their partnership with the University of Monterey for R&D also seems like a potential plus. However, on the red flag side, those persistent operating losses, reliance on external funding, and those, frankly, speculative stock movements tied to the Trump token, they certainly raise some eyebrows.
Those red flags, they really highlight the inherent risks involved here.
Yeah.
While a diversified product suite and focus on a growing market are definite positives, yes. The inability so far to achieve profitability and the reliance on external funding create a degree of financial vulnerability. You have to acknowledge that.
Absolutely.
And the speculative stock movements driven by non-core activities. They can also be a concern for long-term investors. They might not reflect the underlying fundamentals of the core logistics business at all.
They've also launched an AI lab you mentioned with the University of Monterey, aiming to develop AI solutions specifically for U.S.-Mexico cross-border freight.
Yes, focusing on machine learning and cognitive systems.
And they're collaborating with Bayer Crop Science to integrate Blue Yonder's transportation management system. These seem like pretty significant strategic initiatives.
They do. These collaborations and the investment in an AI lab, they signal a commitment to technological innovation within their core area. That's important. The partnership with Bayer, a major player in agriculture, to integrate a well-established TMS like Blue Yonder's that could lead to significant efficiencies and potentially attract other large enterprise clients down the line.
Makes sense.
The AI lab focused on U.S.-Mexico freight. That sounds like a really compelling development, addressing a specific market need. What are some of the key areas where AI can have the biggest impact in cross-border logistics? I mean, that's a whole topic itself.
It really is. But how does Freight Technologies stack up against the competition then? The report mentions traditional logistics firms and tech-focused companies like Convoy and Flexport, potentially.
From what we can gather, their technological edge seems to lie in their specific application of AI within their TMS and their real-time tracking capabilities.
Okay.
Essentially, the system uses AI algorithms to automate tasks like route optimization, load matching, predictive analytics, all aiming to make freight ops more efficient.
Right.
Their market focus seems a bit more niche, though, concentrating on that USMCA cross-border specialization, whereas some competitors might have a broader geographic reach, maybe global.
And scale.
In terms of financial scale,
Yeah,
their projected revenue of around $25 million. It puts them in a different league compared to larger rivals. Some of those are generating hundreds of millions, maybe even billions in revenue.
So quite a difference there. What about the future then? What potential catalysts could drive growth for them? And what are the key risks we should really be aware of?
Okay, potential catalysts. Wider adoption of their Fleet Rocket TMS seems like a big one. Growth in their maritime logistics through that Wavely platform. And, of course, the potential for scaling operations thanks to that recent $20 million funding, so it gets deployed effectively.
With the risks.
The risks are significant, yes.
Right.
Continued losses could deplete their cash reserves. That's a major one. The regulatory landscape for their crypto ventures is, let's say, uncertain, especially around the Trump Treasury token. They face stiff competition from more established players, as we mentioned. There's also execution risk associated with developing and implementing new technologies, which, can be costly, especially with rising R&D costs.
And the crypto strategy itself.
And, of course, the volatility and potential regulatory scrutiny surrounding that whole Trump token strategy remain a considerable risk. It's unproven. This influx of investor interest, however speculative it might be, does lead us back to the question of their underlying financial health.
The recent market sentiment, though, seems optimistic, at least in the short term, given that stock price surge. It looks like investors are reacting positively to the tech stack expansion, the AI lab, the Trump token news, and those partnerships with Bayer and Blue Yonder. Even the reported reduction in losses in FY24 seems to be playing a role, maybe signaling better financial discipline.
That's a good summary. The market's enthusiasm, it appears to be fueled by a combination of factors, including Yes, the novelty and a speculative appeal of their cryptocurrency adoption, the validation that comes from partnering with established companies like Bear, and any indication of improving financial performance, even if they are still operating at a loss.
Right.
However, as we've discussed, the high volatility suggests this optimism might be quite sensitive to further news or developments, either good or bad.
Okay. Finally, regarding key financial metrics, just to recap, we've got those 2025 projections, $20 million to $25 million in revenue,
Yep.
$2 million to $3 million in gross profit,
Mm-hmm.
and an operating loss between $4 million and $5.5 million.
Correct.
The sources, though, they don't provide details on EPS, PE ratio, debt to equity, or other common financial ratios we'd normally look at. If someone listening wanted to dig deeper into that, where should they look?
For a more comprehensive understanding of their financial health, definitely reviewing their filings with the SEC, specifically their 10K annual reports and 10Q quarterly reports.
Yeah.
That would be essential.
Okay, the filings.
Those documents contain detailed financial statements, management's discussion and analysis, which would provide insights into profitability, cash flow, debt levels, all those key metrics. Financial databases like Bloomberg or Yahoo Finance can also offer some of this data,
Yeah.
often compiled from those filings, but the source docs are best.
Got it. SEC filings. So what does this all mean when we put it together? Where does this leave us?
It means we have a company here in Freight Technologies that's, well, operating in an interesting and potentially lucrative space. AI-driven logistics, particularly for cross-border USMCA trade, that's got potential.
Sure.
They have a suite of technology products. They're forging partnerships that could be beneficial. However, they're not yet profitable. They rely on external funding. And they've introduced this highly speculative element to their business with the Trump token initiative.
Right.
This creates a really complex investment picture, with both significant potential upside, perhaps, and considerable risks. The move into crypto is, well, it's quite unusual for a logistics tech company, isn't it? What are some potential strategic rationales behind this, beyond just capitalizing on a trend? That's something to ponder.
Okay, so we've taken a look at the information you provided on Freight Technologies. It's clear they're making some interesting moves, particularly with their foray into crypto alongside their core AI logistics business. The significant stock volatility and the blend of potential high-growth opportunities with considerable financial risks and these speculative ventures, it certainly creates a complex picture for you to consider. For you, as someone keen on understanding the landscape, this situation really highlights the importance of looking beyond just the core business and considering how these sort of tangential initiatives can impact a company's market perception and its financial stability. We definitely encourage you to do further digging, perhaps looking at their SEC filings for more detailed financial information and those risk assessments. What are your thoughts on this blend of traditional tech and novel digital assets? It's quite the mix. We'd love to hear your perspective in the comments below. And don't forget to subscribe, like, and comment on this discussion if you found it helpful.